All right, good morning, everybody. Bitcoin analysis to start off with. So, yeah, a bit of a drop that we've had overnight here again. We are currently testing, if we look on the monthly time frame, a move back into our monthly opens. So this so far, as we can see, if we do zoom in a little bit on this chart right here, we've not really got much of a wick to the downside. So price could potentially be extending this, taking out what is currently our monthly lows and starting to seek back down. Now, worst case scenario for this is we have been within this range between that 71,200 down towards 60K for a few months now. And there is the possibility that that could continue, and then we would be looking at this. Okay, we had the move, the bullish candle, which was subsequently followed by a bearish candle that came all the way back down to the previous month. Then the following month, we went all the way back up again. And now this month, are we going to go all the way back down again and just continue this process with this big 72 to 60K range? It is there as a possibility. I don't think that's the most likely scenario at the moment, but we do have to be aware of that on these higher timeframes, especially as we did take out those previous month highs already within this month so far. So we have taken out the previous month highs. We have seen that when this has happened previously, last time when we took out the previous month lows, you went all the way back up towards the highs again. And now we're seeing this correction. So we have taken out the highs. Are we going to see this come down and take out the lows? In which case, if we are looking on the monthly, it is looking very bearish if we have a look at it from that situation, because we do still have this big gap down here where there is significant volume at 52K. So if this is to be a true, like at least a top for the summer, then 52K is where we would ultimately be looking for as the next area where there is high volume up here if this range does start to break back down again. Overall, though, I think we do have enough support where we are currently to be holding, and I'm not looking at that as being the most likely scenario right now. But if we are looking on a monthly, that is essentially where you do have to be looking. At the moment, we go on to the RSI, and we can see this isn't something that I use too often, but of course, macro, when you're looking at monthly timeframes with just a loss of momentum on each time we have a bull market top, and there is divergence forming here between highs we put in back in 2021 and highs we're putting in now, there is that situation, and that could be an almighty crash to the downside with a macro top being put in if you are looking super bearish at this. Now, there are things to suggest that, I mean, there could be a macro high here. We have seen the ridiculous like celebrity stuff. We have seen that there is a bit of a bubble going on, especially with AI, Nvidia, and the likes of that at the moment with the stock split. We've had people that had been around a few years ago suddenly coming back, trying to move the market to no effect. Times are very different. The tourists have come back to a certain extent, especially within the stock market. But overall, where we are looking at price right now, I do think that there is higher to come. And I do think that overall this is looking okay. There's no reason to panic yet, but there are some toppy signs, which is why there was a short taken earlier on in the week and last week, and we do have to be aware of that. Now, coming down onto the lower time frames, the weekly, it looks a little bit more chill here. Okay, it looks a little bit better. So when you look at the weekly, it is quite simply consolidation above these previous highs. So the monthly looks a bit scary. The weekly looks a bit better. When we have a look at this weekly time frame, we're not really seeing those same gaps that we have on the monthly here. You can see that there was consolidation within that. You can see that we then did mark up. The gap on the weekly time frame was here. We have tested that. Okay, so this has been tested. The weekly not looking quite so bearish what we are seeing is consolidation with volume tapering off. All right, you had that big peak of volume back in February, March. That's when the market was incredibly bullish. You think back to easy mode, that super easy mode that there was from basically October, November last year that took us all the way up into March, April. We are just seeing consolidation. We're seeing like this here being back in March. So from the beginning of March, we've just been contained within this range, volume tapering off, and that means that value is starting to rise to meet price. So we had seen the test off of the anchored VWAP, the yearly VWAP, previously, which did give us some good support. We have seen this move all the way back up to the top of the range here. If it can hold, it looks good. There's not really any imbalance on the weekly that needs to be dealt with below here. If this is to correct further, then you'd say just searching down maybe into this low volume area that we have around 65, 66 could be a target for this. But the weekly, looking nowhere near as scary as what the monthly is showing, but the monthly is a higher time frame, so have to be aware of that. Go down onto the daily. This is it's a small candle, really, so we can still see like volume is tapering off here. It's not, we had a climax with the push up that was all the ETF hype and everything that was going along with that. We've been contained within this range. Volume is cooling down. There's not a significant amount of aggression to the downside, but as well as that, there isn't really enough that's offering us some support, and we haven't seen any type of, I'd say at this stage, we've not seen any capitulation. It's just a little bit sketchy. So people that are long on leverage up here, they may be shaken out or stopped out or liquidated by now. But there's not been any sort of even close to any capitulation for the longer term traders. Remember, I am myself in a long from 58, have compounded at 61, and have compounded again within this range. Okay. And for me, with the long positions that I'm in, I'm not going to become concerned unless we do start coming back down below that 66 area and start to drop out of this range that we're currently in. So for myself, I think this is okay if you are swing long looking for all-time highs. This is just a range within this upper portion of the chart. We can see here that we had basically a full range that was formed within this move. And then we had this little mini range at the lows. And now we're having this mini range up at the highs here. So are we able to hold this midpoint? Are we able to hold what is really considerable, you would like to see as considerable support between, I'd say, you look at this little candle here as a decent midpoint. You can see, bring that back. We have support back here. You have support back here, and this is where we start to get that you can kind of split your range into two with an upper range and a lower range. What we don't want to be doing from this daily is starting to get caught back down there. Is there anything else to really say on the daily? There wasn't any divergences that formed, okay, because we never ended up closing daily candles above previous ones. We've just been consistently closing these candles lower. So when you look at candle closes here, we have these ones, then we have these ones, then we have these ones, they were lower, and now we have these ones, which once again are a little bit lower. And yeah, no divergence to speak of, tapering off volume. And we're at the range points of control and the monthly open. Now the interesting stuff, we'll go down onto the 4. The 4 hour is where we did have some bearish signs, and this is where you could have got into a short really quite easily. We knew that this was highly likely to play out, and there have been 2 pretty simple opportunities to go short, both of which I have taken. only one of which I am still in. So I have taken profit on the short from yesterday, but I am still holding that. And with the short that I took at the end of last week, because it wasn't a Friday, closing that out over the weekend, and having to jump back into a short to start a new week yesterday. So if we look at this, we did have signs that it was slightly toppy with some divergence here on the RSI against these two highs. So you have a high, price made a higher high, and then once again, even locally, right, we look towards these two tops back here, right, where we did have candle closes that were higher. And on those candle closes that were higher, we had a loss of momentum. As you can see from this, let's just make this a little bit bigger. There we go. So these highs against these highs with the divergence there, which has now, I'd say, entirely played out. That divergence is done. You're back into oversold here on the 4 hours. So it's been a really, really big corrective move all the way back down to the bottom of the range. Two like pretty significant drops here. And that now, you would say for certain, even if we do go a little bit lower, I'd say we're probably looking at this being a really good area to bounce on the 4 hour, which could take us back up towards that, like maybe even as high as 69. We could make another low, but at this stage, you'd want to see something like this happen, and then the RSI start to recover, and you maybe get some divergence around here, something along those lines, right? So the 4 hours looking like it could be bouncy. Could be a good opportunity. That's the wrong level on the chart just there. So I'm going to cover a couple of these shorts, and we're going to look at what was the target for that. So I'm just going to bring things down onto the 30-minute, and you can see. So these short positions. Now, on spot, we never took the high. So I can show you on this over here. We did, however, take it on perps, right? So we had the sweep of the highs. Now, this was something that I explained when I did my last, like, just standard video update, that we were having this low volume rise, very low volume rise, after we didn't take out the lows of the range, right? So last week was like really, really, I mean, straightforward to take this short, and then very straightforward to know the target for that short. But it was a bit of a weird week. It was just like you had the move up on Tuesday. We were within this just pathetic little 1% range. We had that drop on Thursday evening, which didn't come down and take the lows. Now on the 4 hour, we do have a big gap that's here. Okay, so we were expecting this area here to be tested, and it didn't, right? You had the move up, you put in that low, and it didn't come down and take that low. What happened afterwards? You had this very, very low volume move up. There really wasn't very much going on here at all. And I was showing on the CVD that we could see that this was mainly perps led. So the probabilities that we were seeing with that is that, okay, we're looking to take out highs here. We're seeing a perps led rally that hasn't taken out the lows. So what is the target going to be? It is going to be to come and take these highs up here. Now that is what we saw. Okay, so these being the highs from back on in May 20th, previous month high that should have been over there. I've got these labels all mixed up. It's because I did the stream yesterday where I I was rushing a little bit to do everything, and I've mixed up my levels a little bit. But yeah, there we go. So those being the highs over there, price taking those out, of course, and then giving a nice short opportunity where we were targeting these lows here. So when you look on the 4 hour, this was the gap. All right, we knew that was likely to get tested, and we wanted to see this move down into it. Now, what we have subsequently seen from that moment onwards, and this is all really, really nice and clean on the 4 hour, is we had this range. Okay, we knew it was likely to bounce at this stage, so we knew a bounce was likely. What we had after that was, so I closed out this quickly, closed out this short very quickly. Did have not played out all of this, but I am in a short from yesterday. Now, Here is where we see the range. So you have a gap that's formed on the 4-hour. All right, we were closing candles above. So that's decent. All right, you were just holding sideways, holding steady, holding steady, holding steady over the weekend. And again, what happened yesterday is there was that move down that just took out those weekend lows. So as we can see over here, the move that took out those weekend lows, which could have given a nice long. I didn't take the long, right? Because I'm already in the swing long. I didn't really want to add like more long exposure on this. And I think this may have happened just whilst I was streaming. Or very, yeah, it was literally as I was streaming. So I didn't really have the opportunity to take that short. I think we were probably looking at altcoins by the end of the stream yesterday. No, maybe it was a little bit afterwards. Maybe it was slightly afterwards. In which case, I would have just gone and chilled out for a little bit. But anyway, regardless, I did not take the long. But then we saw that very nice move up, and this here was just a very, very clear short. So I did update on for the crew. So for anyone that was in the crew, I did do an alert on this. I can show you over here if I do just bring this up. Basically was looking at, again, the 4-hour chart saying local resistance here for Bitcoin, testing back into previous support and almost cleared 50% of the 4-hour gap. If it can push above 70,100, then filling the imbalance above up towards 70,600 seems likely. Not much to do other than stay patient here on the higher time frames. However, it would be a good area in which to take profit if longs or look for shorts if the 4-hour closes back below 69,850. So 69,850 was an important level to be, basically looking at for like those bigger swing shorts again if it does close below that. And then there was the short that was triggered here, and then we have seen this continuation all the way down, and yeah, still having taken profit on that short. But in fact, I marked this wrong on this chart. It was here. it wasn't as good an entry as I've actually shown on this one. It was here that I did it. I was being a bit more patient on it, and my target was another 4-hour gap that was lower down. So we go back onto the chart. This essentially what I was talking about. Okay, where we have this move up now. Phone calls going off in the background. Yeah. So we had this move up towards the highs. Could not. I was looking for a close basically above here to say that we may see a move higher. So we were looking at this. This 70,100 was the level, remember, that I just spoke about. So 70,080 was coming back to these lows, 70,100 being this low here. So you can see that zone here. And if we could have closed a 4-hour time frame above there, then I would have been looking for a move up towards here, that's 70,600. All right, so essentially meaning that if we closed up here somewhere, I would have been targeting a move up to here, and we would have seen if that would have triggered a short. And you're just going level to level, judging off of the candlesticks that we've got. We did get the close below, and that did trigger a decent short off of that. What am I talking about? It was there. It was there that I took the short. I got confused between the 69,850. It was there. So once that happened, yeah, short position taken. Another opportunity to then take the short once you get caught below this low that was later on in the evening. It was this short because it was that freaking candle right there that I took it on. And yeah, we've since seen this move down. So this just being very, very simple, 4-hour time frame mainly that we're looking at. And as soon as you see that weakness that did not go continuation higher, you had a move above it, a second attempt towards the highs, and then we drop down, of course, losing weekly open here as well. So this was quite significant. If we do add on our VWAPs, we can see that we had this move down to start the week on a Monday, and then the move up. Now, this is interesting as well. This is a long update, but this is really interesting as well because Mondays are statistically the highest probability to be green. out of any day of the week. So there is a much higher probability of Mondays being green and putting in either the high or the low of the week than any other day. Now, the fact that we obviously didn't close green yesterday, we did close red, but we did get that move up, which you can be fairly confident is going to happen on a Monday. Like we did search down to begin the day, you can be fairly confident that Monday will be putting in highs. That tends to be what we've done almost every Monday this year so far, certainly within this range that we've been in since back in March. I'm pretty sure every Monday has had a pretty significant move up, because you tend to get this Sunday pump, then it dumps, and then Monday searches up, and Tuesday you correct, and then you continue on with the rest of the week beyond that. But anyway, bit of a side note there. What we also had as confluence for this on the short was a naked VWAP close that was at 70,160. So essentially we were coming up, testing into this gap, could not break through. You then drop down, another opportunity to go short here as you lose the weekend highs. So it had the move to take out the weekend lows. You then take out the weekend highs. Once you've lost that again, you set up for shorts back down to target the lows a second time. VWAP then being flipped into resistance at weekly open. Another opportunity for a short position there. And then what we have seen today, if we do go on to the even lower time frames and have a look at where we are now, we've just taken out these lows again. This is a good area. I mean, a scalp long here, and I'm going to look at Bitcoin in a minute, could be a real interesting trade right now. So we'll see how this goes. You've got some nice market structure to work on right now. There could be a good long starting to form here. And I'd be very interested to see what Ethereum is doing as well on this low. I would hope that ETH BTC is getting a bit of a bounce, and maybe we haven't taken out the lows from earlier on ETH. But I'm going to look at that in a minute. I'm going to focus on Bitcoin. But essentially what I'm expecting here is Bitcoin's done this and ETH's done this. So a bit of a divergence. Maybe if in the chat you can have a look at that whilst I'm not looking at it, and we'll take a look at that in a moment. Because that was a plan that I wanted to cover today, and we're already getting it. As Lyrium has said in the chat as well, we did have that VWAP open drive. So we did have this on our daily open here, where from our daily open, you have a very small move up that just takes out some local highs, right? A little move up just takes out some local highs. You lose daily open, you test it again, and then you're using that VWAP to drive all the way down, all the way down, all the way down. VWAP still acting as resistance at this stage, has not been able to break that VWAP at any point, this being on the Woo chart. So it's a bit of a scrappy VWAP without a lot of volume here. But if we look at the same thing on the Coinbase chart over here, then this will look a bit cleaner. You've got a nice clean VWAP here where you can see that VWAP just acting consistently as resistance, and then you get the big drop afterwards all the way back down to that monthly open. So the target for this, if you are short from here, essentially being that we have, if we look on here, we've got another gap on the 4 hour that we cleared, then came down and took out this low. So you've essentially hit that target, all right, of this being your previous week low down here. That has been taken. So we've taken the previous week lows, we've taken the previous week highs. Cool. Right, we're back into monthly open. We've not yet put in a deeper wick on the monthly because this is the lowest that we've been on the month so far. But this still could potentially go lower. But it would be, and it is, an area in which to look for long positions. So if we have a look at where we are, like this is a decent area in which to look for longs. if we are holding this monthly open, we have taken liquidity below previous week low. That's decent, right? From what we've seen with this price action, that's come down as far as, if you are bullish, this is where you'd want to hold. And we're back at an area in which there has been significant interest in price previously, because it is the point of control of our entire range. So this I do consider to be a range in itself, and we are simply trading this range until the point in which it breaks. If it does break down and we do start losing 66, then we would be looking for moves down into this area of the chart down here, where you've got this high volume node at 62, you've got the low volume node that finishes around 64. It could surge all the way down into that. I don't know particularly where that would end up stopping, but this is a very, very good area in which to be bidding this if you are just trading this range, considering this to be the low of this current range that we're in. Anything else to say on Bitcoin? This is a very long video, but there is a lot to discuss today, because we have finally had a decent move to talk about. Yeah, still making higher highs. So that's cool. All right, still making higher highs. This is where, yeah, everything is currently. Open interest delirium, you say. So yeah, we will have a look at the order flow and have a look over there. So I just want to share a few charts of this. As this is, well, we're going to carry on. We're going to carry on with the Bitcoin update. This is going to be a long video, a long Bitcoin video, for when I do eventually upload it. So if you have missed anything, I will upload this segment, this Bitcoin segment, as a separate video afterwards. But I'll keep going for now, otherwise it's going to end up even longer, isn't it? So moving on to this, hit the likes. Come on, guys. Come on, let's get that likes up to 50. And let's start to have a look at these charts. So there's not really, yeah, let's have a look at the liquidations first of all. Just the liquidation heat map. Of course, this isn't particularly mathematical. It is just an estimate of where liquidations are likely to be. There is still further. Okay, this could still come down towards, this is saying that we're probably looking at 65,600 as the bottom of where any possible capitulation could end up. So if we zoom in a bit on here, then you can see this just big cluster down here. There's a good few $1 billion potentially of long positions to liquidate below these lows. And if we are to see a capitulation, we would expect to clear all of that and then seek down a little bit lower. So that does bring us into that 65,600, 66K zone, right? So something to be aware of there. Where does that line up with is, of course, it does always do that. It does bring us back down to take out a lot of these lows that we have previously seen. So be aware of that, of course. We'll come on to the ETF in a moment. But locally, what do we have on Agra? So spot had led much of this move down. So we can see it was just consistent, almost that selling into support yesterday from spot. Perps then bang in one go wiped wiped out of the market and then start to trade lower. So where we are here is this rally that we're seeing now, which isn't surprising at this stage, but the rally we are seeing now has been more perps led than spot. This being because we've taken out a local low. You can see the selling here still from spot. However, it's okay, right? It's holding some support here. We've hit a lot of the liquidations that this needed to do. This final push down hasn't impacted the market in the way that previous drives into lows have. So we have these 3 drives down. High volume, high volume, high volume, high liquidations on each of them. Okay, so you can see liquidations here, liquidations here, liquidations here. And high volume here, high volume here, high volume here. And then on this drop, it's not really seen that continuation. So the selling had been relatively aggressive on the move down to take out those lows again. Maybe just being because, look, this low happened just before the London session opened. And now we want to go and take that out and then get this reversal underway. Could be a possibility there. So we've taken out those Asia lows, getting a bit of a bounce here after just seeing a bit of a lack of aggression further down. Now looking at the open interest, well, this is zoomed in a lot. There we go. So open interest has just been it's been kind of interesting. We do have inverse. We do have perps longs opening on this bounce. We have seen a decent number of liquidations and a decent drop in open interest throughout the entire move here. So you could see that we'd had this just gradual ramping up on OI throughout yesterday. Okay, so we had this ramping up on open interest. CVD was fairly flat yesterday. But what we saw, this is weird. This aggregated spot cumulative CVD doesn't really line up. So I'm going to have to see why that's there. I don't like it. I don't like it on CoinGlass. It doesn't seem to make sense to me because it's completely different to what thingy's showing. But a very good drop in open interest that's basically cleared everything from yesterday. Now, if we zoom out slightly on here, we can see that overall OI is rising. Delta is dropping. So yeah, that from the higher time frames is interesting. That could suggest that we still need to see some big capitulation here that wipes out a lot of this open interest. However, this open interest could drop if there is to be a quick reversal and move higher. Then what that would do is squeeze shorts, because when you look at the delta, again, it's relatively, I mean, it's down throughout the majority of the range. So there are shorts within this as well. And if you do need to clear that open interest, it can go in both directions. But whatever it's going to do, it has to do quickly in order to get a drop in OI. If you just see this grinding down of price action, or if we just start floating back up towards the highs again, this will just continue to increase the OI. So if we are going to correct this somewhat, then it has to be a quick move. Because we're currently moving down, maybe that event needs to happen to the downside before we can be thinking about a move higher again later. So something to be aware of there. Yeah, certainly. Now, anything else to look at? Ooh, for the first time in a while, we now have a spot premium again on this exact 4-hour candle that's just started. So we do look at it. Look, it's little, it's just about there, but it is there. So we do have a spot premium. Whereas for a lot of this range, we'd seen perpetuals being a little bit greedy, maybe expecting that break to all-time highs, really wanting that break to all-time highs. We're all fed up of this range, let's be honest. We are all fed up of this range. It would be nice to break it. But for the first time, okay, it's gone. It's gone now. It's disappeared. But we did for a moment. All right, we did for a moment have spot trading above perps. We'll see how this goes on. But the perps premium has cooled off, which does mean that the funding rate naturally will have cooled off. Not that it was high to begin with anyway. But if we do go over to funding, if we do have a premium here, then it does mean that our funding rates are likely starting to turn into negative. And there they are. So we got negative funding on some of the DEXs, DYDX, Vertex. and very, very neutral funding. But we are creeping into negative funding territory, which has been good areas for bouncy price action. So that's something to keep in mind. There could be some bouncy price action that we do get if this does continue. Another thing, let's have a look at the ETFs before we wrap up the Bitcoin segment, the incredibly long Bitcoin segment. We will have a look at the ETFs. I don't want to look really at the Hong Kong ETFs. Oh no, that's fine. We're not looking at the Hong Kong ETFs. But all right, natural that we see some outflows yesterday. Probably likely to see some more outflows today. But if we do look at these 2 days that we've seen the highest inflows of ETFs, so this was the 12th of March and the 4th of June. So 12th of March and 4th of June. I think it was Delirium posted a really, really good post about this in his section on the Discord. But if we look at that, well, they 12th of March, 6th of June. We'll go back onto the charts and we'll just have a look at the chart here from these two highs that have been put in. So 12th of March, this was the highest inflows that we had on Bitcoin. All right, here. Now, what did price do after that? It came up, took out those highs, and then had a big correction, right? Now, what have we done here? Was, again, what we saw was highest inflows on 6th of June. What happened? Price came up, took out those highs afterwards, and then had a correction. So you almost see those divergences where when you have these big inflow days, and when you have those days where the ETF peaks with those inflows, quite often you'll find that you get profit taking afterwards. But then what will happen? Perps will lead a rally up to take the high on futures. And then once you take the high, you dump it all the way back down again and shake everybody out. So that's something that we can look at for towards the future, right? And I think it also works on the downside. So the days where we have really, really high outflows, of course, this being on the 1st of May, we look back down to the 1st of May, and I mean, it didn't swipe the lows again on this occasion, but that high outflows day did signal a low. So the ETF providing some pretty good, I mean, it's normal. You would expect it to do so. Okay, if you're getting a ton of inflows and you're getting a ton of buying and it's just one-sided price action, you're probably going to correct it soon afterwards, right? So it's there. It is interesting. So keep an eye out for when we get these really big peaks, and they can be really interesting. And when it's just doing this sideways chop around the middle, it's when it comes up to close to $1 billion, right? $1 billion, 900 million above that, and below you're looking at a little bit less. So let's say negative 500 million. Those are areas where I think would have to be become really interested in what's going on, because they're significant extremes. And yeah, this is a massive new part of the market that I think is important to be analyzing, because these ETFs have, I mean, just so far sucked up 5% of all of the Bitcoin in circulation. And they are consistently eating up more of the supply that's coming into the market than is actually available. So it is a huge market that we do need to be aware of, and be aware of how it works and how it is affecting price. Of course, we don't have much data to work off of right now. We've only really had a couple of peaks, a couple of little troughs within this. But it is important to be aware of what is going on, because it is the driving force right now of the market. It is where most of, more than even exists of the current, the supply that's coming into the market is going into this stuff. And it's all going through Coinbase as well, which is why the Coinbase chart suddenly becomes really, really interesting. So these ETFs, 5% of the entire supply. is within these funds right now. So very interesting. Yeah, I'm going to wrap up this Bitcoin segment. That's 40 minutes of Bitcoin. This is the longest Bitcoin update video I've done in a very long time. But yeah, for those of you who are watching this as a rerun of the live stream, thank you very much for watching. Have a great day, and I'll see you in the next video. And I'm going to stop recording here. So cheers. Bye-bye.